Okay. So in the last session, we did an activity on admission and withdrawal of a partner. However, there's an amount that was missing, and I'm yet to finalize that activity with my partner. She has been very busy, so we couldn't set up a meeting to finish it. Okay, so today we'll be doing liquidation based on a question that was sent on the group last night by Leonie. It was a full-time test. So that's what you're going to do. And just make sure that you have your your question on a separate device, because I won't be sharing it. I'll be sharing the calculations that I did yesterday. Okay, so question 2, it was out of 20 marks based on liquidation of a partnership. So this question was very easy, since there were no a lot of information given, such as expenses that occurred during liquidation, such as you having to draw up a full current account and all that. So it was quite simple and straightforward, actually. Okay, so you're told that Albert and Congo have been trading together for some time. Congo decided to change her career, and since Albert does not want to continue with the business on his own, they decided to liquidate the partnership. So the statement of financial position below represents the entity at the end of June 2020. So you are given NK services statement of financial position, and then you are also given some additional information. Says the following transactions occurred during July in dissolving the partnership. So the partnership was dissolved in July. Okay, so the first one, a vehicle with a carrying amount of 50,000 was sold for 39,000. And then another vehicle with a carrying amount of 30,000 was sold for 12,000. The accounts payable was settled in full. The land and building were sold for 140,000. The equipment was sold for 100,000. Accounts receivables paid 40,100 in full settlement of outstanding debts. And then the outstanding loan from Sabo Bank was repaid in full. So all those are the transactions that happened during the liquidation process. So we are asked to compile the journal entries for the above mentioned liquidation. So based on what I did yesterday, I actually made it very easy because I included calculations. I did the realization account, I did the capital account, calculated bank account, bank amount, and so on. So we are going to go into details, or we are going to do this activity together, or answer these questions together. Okay, so if you have enough time during the examination, only if you have enough time during the examination, then you can always draw up a realization account first, for you not to get confused. That's only if you feel like you have enough time during the examination. For instance, you are only asked to compile journal entries. Like in this case, you're only asked to compile journal entries. However, you feel like, okay, no, I have enough time, and maybe drawing up the realization, drawing up the realization, the journal entries might be a bit confusing if I don't have the realization account. So you can always draw up one. But if you feel like no, you can draw up a realization account without, you can draw up journal entries without a realization account, then it's also fine. Okay, so this is how we are going to answer the question. We are first going to start off with a realization account. Remember, in the examination, you can also be asked to draw up a realization account. Okay. So we have a realization account, which has the debit side, and it has a credit side. And then remember that if we go back to our liquidation summary, the steps, we said that it's when you're dealing with liquidation, it's very important, or it makes it very easier for you when you follow the steps. So if we can all remember, what is the first thing that we need to do during liquidation, or what comes in the first step? What is the first step? What do you do first? Anyone that still remembers? What comes in the first step during your liquidation process? What do you do first? Anyone that wants to try? Anyone? Okay. Since y'all already forgot. So we said that during liquidation, we have 4 steps there. So we said that the first step, the first thing that you need to do is you need to close off your current account and your drawings to your capital account. That is the first thing that you need to do. You close off your current account and your drawings account to your capital account. How? Let's start off with current account. You have to close off your current account by debiting your current account and crediting. Please just mute yourself. Wendy?
Okay.
Yeah. Thank you. Okay, sorry for that. So as I was saying that the first step that you need to do during liquidation is that you need to close off your current account to your capital account. That is the first thing that you need to do. Now, how do you close off current accounts? You will have to debit your current account and then credit your capital account. That is in the first step. So your first journal entry, should be you closing off your current account to your capital account. Are we together? So
yes.
So you debit your current account of Albert and Congo. So
you were.
please mute yourself. Thank you. Oh, okay. There's some noise on the background. I'm not sure where it's coming from, but please, if there's noise on your background, just mute yourself. Because the session is being recorded.
Yeah, can you mute them yourself? Because I think that person doesn't even.
Okay.
We're not getting what is going on.
Okay. So as I was saying that in the first step that you do during liquidation, or the first journal entry that you will have is you closing is you closing off your current account, your capital account. So in the information that you are given the equity accounts where you have your capital account that is of Albert and Congo, and also you have your current accounts of Albert and Congo. So those current account balances, you will need to close them off to your capital account. Now, how do we close off current accounts? By debiting our current accounts and crediting our capital accounts. So Albert had a current account balance of 43,500. So you have to debit his current account, and then you credit his capital account with the same amount of 43,500. And then Congo had a current account balance of 54,500. So you will have to debit his current account 54,500 and credit his capital account with 54,500. That is the first step that you need to do. If you had drawings, then you could have closed off the drawings against your capital account. How do you close off drawings? So you close off drawings by crediting your drawings and debiting your capital account. Ne? You credit your drawings and debit your capital account. That's how you close off your drawings, if there were any drawings. But in this question, there were no drawings, so we move ahead. Okay, so we move on to the second. Yeah.
Sorry. So if we get drawings, we write it off against the capital account, where the drawings will be credited and the capital will be debited, right?
Yes.
Okay.
Okay. So why do we think we'll have to debit our capital account? Simply because first, drawings decreases our capital. It decreases our interest in the partnership. And where do we record decreasing amounts in the capital account? The capital account decreases on the debit side. That's why we'll have to debit our capital account. And also, drawings increases on the debit side. Okay? So closing it off means that it needs to have a zero balance. You understand? So for it to have a zero balance, if it had a balance on the debit side, so we need to close it off by recording on the opposite side, which is the credit side. That's why we are crediting drawings. Okay, and then we move on to the second step. The second step is drawing up our realization account. So from there, after closing off our current account and drawings account, then we move on to the second step, which is drawing up a realization account. And as I said from the beginning, if you're asked to only journalize the entries or the transactions, you don't need to draw up a realization account. You can only draw up a realization account if you know that you have enough time and you feel like if you just draw up journal entries alone, then you might miss out some entries or you might get confused. Then you can always draw up a realization account. But if you're good at the journal entries, you do not need to draw up a realization account. However, because sometimes you can be asked to draw up a realization account, I had to draw up a realization account yesterday. So let's see. So drawing up the realization account, what do we record in the realization account? In the realization account, we have to record all transactions that happened during liquidation. We have to close off our assets and our liabilities first to our realization account, and then after that we record all the transactions that happened during liquidation. So let's start. We are first starting with the assets. So we said that when it comes to the assets, you first need to close off your assets carrying amounts. Please take note, your assets carrying amounts to your realization account. How? By crediting your asset account and then you debit your realization account. That is the first thing with their carrying amounts. However, you can also use their cost prices. But we said that if you are using your cost prices of your assets, then you will also need to credit the accumulated depreciation. If you are using the cost prices, then you also need to put into consideration the accumulated depreciation, the contra accounts. However, please, if you use the carrying amounts, if you use it, because in this case you were given both the cost and the carrying amounts. So if you use the carrying amounts, please do not, and I repeat, do not record your do not record the accumulated depreciation. You only record accumulated depreciation, or you only close off accumulated depreciation to your realization account if you use your cost prices. Okay, now in this case, I used our carrying amount, so I didn't have to close off, to record my accumulated depreciations again in the realization account. Okay, so we have the debit and the credit side. So the first transaction says a vehicle with a carrying amount of 50,000 was sold for 39,000. And another one again of a carrying amount of 30,000 was sold for 12,000. So if you add these two carrying amounts, 50,000 plus 30,000 will give you 80,000. Sorry? Yeah, it will give you 80,000. And if you go to your vehicle's carrying amount, you have 80,000. So there are two options that you can do. You can write or you can record these two vehicles separately. First, you have vehicle 50,000 and then vehicle again 30,000. However, I included, or I did not record them separately. I recorded them as one account. Why? Maybe because in the business, we only have one vehicles account. And that is the account where you record all the vehicles that come into the business. So when you close off, you only close off one account and not two different accounts. Are we together? This is just information to guide you on how, on the kind of on how the vehicles were sold. However, we only have one vehicle account in the business. That's why when you close off only one vehicles account that consists of all vehicles that are in the business. So the carrying amount of the vehicles was 80,000 based on the statement that were given, statement of financial position that were given. They amounted to 80,000. I hope we can all see where the 80,000. Yeah.
Sorry.
Yes. Oh, okay. So we move on. There's someone asking a question, but I don't know what happened. Okay. So I hope we can all see where the 80,000 is coming from, which is the carrying amount in the statement of financial position. So we first need to close off our vehicles account. We first need to close off our vehicles account by debiting our vehicles, by crediting our vehicles and debiting our realization account. Now, in this case, I did not draw up a vehicles account. The activity was sent on the group. The activity that you are doing was sent on the group last night. Written question 2 on top 20 marks. A and K services. Okay, so the vehicle's amount was 80,000. So you debit 80,000 in their realization account. Ne? And then we also said that after recording your carrying amount, then you also need to record then you also need to record the amount, the selling price or the liquidation amount. So now looking at the information that you are given, you are told that the first vehicle was sold at 39,000 and the other one was sold at 12,000.
Yes, 12,000.
Yeah, the other one was sold at 12,000. Ne? So if you add 39,000 plus 12,000, it will give us how much?
Just one.
It will give us 51,000. So the total cash that we received, cash or bank, but usually it's bank, né? Because there's no way you will receive huge amounts as in cash. Cash or bank of 51,000. And then we move on to the next transaction. After we are done with all our vehicles, I hope you understood how we got the 80,000. Ne? We said instead of, because we only have one vehicles account in the business, we do not need to, we only have one vehicles account in the business. Ne? So we only close off one vehicles account. Therefore, we need to add up their carrying amounts, 50,000 plus 30,000, which give us 80,000, and that's the same amount that is in the statement of financial position. We add up their liquidation amounts, and then we record it in the realization account. Are we together? Are there any questions before we move on? Any questions? Okay, so there are no questions. We move on to the next transaction, which the accounts payable was settled in full. Ne? Their accounts payable was settled in full. So we need to record our accounts payable. What type of account is accounts payable? Accounts payable, in other words, creditors, accounts payables, in other words, creditors, these are liabilities, our suppliers, people that we owe money to. And how do we close off liabilities? We said that we also need, that's part of the realization. We need to close off our creditors or our liabilities to our realization account. How? By debiting our liabilities account, in this case, creditors account, and crediting our realization account. In other words, just know that assets, the assets carrying amount will be recorded on the debit side of your realization account, while the carrying amounts of your credit or of your liabilities will always be recorded on the credit side of your realization account. And then their liquidation amounts will be recorded on the opposite sides. Just take note of that. So creditors is a liability. Liabilities are recorded on the credit side of your realization account. So in this case, we are told that you are told that the accounts payable was settled in full. So we go back to our statement of financial position. We go back to our statement of financial position. We go to our creditors. So we are told that our creditors were 35,000. So we need to record the 35,000 creditors on the credit side, their carrying amount. And then we are also told that we paid a total of 35,000. It was settled in full. So on the debit side, you will have cash or bank of 35,000 because it was settled in full. You paid the whole of 35,000. That's why you have to record on the debit side as cash or bank 35,000. 40,000. That is your creditors. And then we move on to the next one, which is the land and building were sold for 140,000. And also the equipment. Now, if we look at the statement of financial position, usually, especially starting from financial, because financial is totally different from fundamentals of accounting. Usually, the property, the non-current assets are recorded. They are not recorded separately. They have one main account called property, plants and equipment. So now in this case, the land and buildings and the equipment form part of the property, plant and equipment as one account. So this business only has one account of property, plant and equipment, which includes both the land and building and the equipment. So now let's look at the carrying amount. First, we need to record the carrying amount of this property, plant and equipment. The carrying amount was 265,000. So property, plant and equipment is an asset, and we said that assets are debited in the realization account. So PPE, here PPE means property, plant and equipment of 265,000 should be recorded on the debit side of your realization account. Are we together?
Sorry, Sarah. Just repeat it. When a building.
Okay, so we said that in financial accounting is different from fundamentals of accounting. In financial accounting, we have one main account of non-current assets, which is property, plant and equipment. Now, property, plant and equipment consists of your land and buildings, your equipment, etc., and all your machineries that you have in the business. Now, in this case, you're told that the property, plant and equipment carrying amount was 265,000, while the land and building, now you are told that now this property, plant and equipment consisted of the land and building that was sold at 140,000 and the equipment that was sold at 100,000. So those are the accounts that fall under the property, plant and equipment. So the first thing that you need to record, you need to record your property, plant and equipment of 265,000. Now, looking at this, you cannot even record those land and building and equipment separately because you do not know their carrying amounts, individual carrying amounts. You are only given the total carrying amount of your property, plant and equipment. So first you debit your property, plant and equipment for 265,000, and then you now credit the amount that you received. You are told that you received, you sold the land and building for 140,000 and then the equipment for 100,000. So what is the total amount that you received? What is the total amount you received? How much?
240,000.
You received a total of 240,000. 240,000. Sorry, I actually wrote cash here because based on the statement of financial position, there was actually a cash account and not bank account. That's why I ended up writing cash all over. Okay. So we received the realization, the liquidation amount was 240,000. Okay. So we move on to the next transaction. I hope that one is clear. Unless there are questions before we move on to the next transaction. So the next transaction is accounts receivables paid. Accounts receivables, those are debtors. Accounts receivables, those are your debtors. They paid 40,100 in full settlement of outstanding debts. Okay, so the first thing that we need to record the carrying amount of our debtors. Now, when it comes to debtors have contra accounts. The contra account of debtors is known as the allowance for credit losses. So there are two ways to record this, the same way as your fixed assets and accumulated depreciation. So debtors, you can record them at their actual amount or their carrying amount. Their actual amount is the amount that you have without subtracting your allowance for credit losses. And then the carrying amount is the amount that you have after subtracting your allowance for credit losses. Now, in this case, I used the actual amount of debtors, and I advise you that you always do that using your actual amount of your debtors. So you have debtors of 55,200. Debtors are assets. We say that assets are debited in the realization account. So you have 55,200. And then we are told that we received 40,100 from those debtors. We received 40,100 from those debtors. So we go to our credit side, we record the cash that we received. So it's 40,100. That is the amount that was received. Okay. And then we move on. We move on to the next transaction, or before the next transaction. After recording your debtors, you have your allowance for credit losses. Remember the contra accounts, we said that the contra accounts should also be closed off your realization account, especially the credit allowance for credit losses. Because when it comes to depreciation, you only record it when you are using the cost prices of your assets. But if you are using carrying amounts that don't need to record it again. But in this case, allowance for credit losses, you always have to record it. If you are given your allowance for credit losses, you make sure that you record it. Now, allowance for credit losses, this is a negative asset. It's treated like a liability. It's a negative asset, so it's treated like a liability. That's why you will have to record it on the credit side. So on the credit side, you have allowance for credit 1,000. The carrying amount of allowance for credit losses is 7,000. So you record your 7,000 on the credit side. And then we move on to the last transaction, which is the outstanding loan from Sabo Bank was repaid in full. So loan is a liability. Liabilities are recorded on the credit side of our realization account. So we have loan 62,000. And then we are told that it was paid in full. So we have on the debit side, the opposite side, cash of 62,000. So we only have less than a minute. The class might end itself anytime soon. So after it ends itself, I'll just restart it. Then we can continue by balancing of our realization account. I think I can just...
Okay.
Any questions before it ends? Is everything clear? Do you all understand?